Hello and welcome back to Bunex Investment Group. In this video, we are going to be talking about the hidden pattern, simple hidden pattern that if you master, you can even change the odds around in this business. All right, so basically this strategy is a strategy anyone can use on Forex, stocks, or crypto. I get asked a lot of times, can I apply this on this particular asset group or asset class? This one is for all trading assets. So it is simple and rule-based. Waits for high probability setups. Just two things that you are going to require for you to get in action. All right, so basically when the market trends for a long time, it traps before reversal. We are saying the markets usually trends for a long time. Where we want to take action is this particular point. So we want to participate in the market to see long time movement reversals, right? So when the market moves in one particular direction for a long time, we want to participate when it starts to reverse. So this is simplified by use of EMAs, exponential moving averages, to know these exact points. We as well can use the COT, which basically states the commitment of traders report. It also shows us these particular points where the market makers are now preparing to reverse a long-term trend. So that is actually an advanced way to see it, which is also explained on this channel in one of the videos that we uploaded earlier on. But in this particular strategy, we are going to use exponential moving averages, a fast and a slow EMA. So basically we need to start by confirming the trend. When the fast EMA crosses a slower EMA, the trend is confirmed. So that is the first thing that we need to see, a crossover of a fast and a slower EMA. Then we can say above crossover of the fast going on top of the slow, we can actually say it's a bullish bias, and below is actually the inverse, which is bearish bias. So these are the 50 and 800 EMA. We are saying when the 50 and 800 crosses to the upside, it's actually a bullish bias, and when it does to the downside, it's actually a bearish bias. So here where most traders go wrong. They jump in immediately after the crossover, which is not the rightful way to do it. I can see some of you are starting to ask, when they crossover, is it an entry point or an entry signal? We are not going to trade off those crossovers of these lagging indicators, but they are going to tell us where the market makers now intend to go. So the real edge lies in a trap. We want to see traps before we make an entry. Traps is the secret for you to actually get in the markets and actually come out with a profit. So patience is your secret weapon here, which you are going to practice. So we are going to wait for the first pullback to the 50 EMA after the cross, and we are going to look for a trap at 50. I understand that the word trap might not be a common term to some other people, so we need to have an example on real charts to look at what a traps actually appears on the charts. Before we go over the examples, let me quickly show you something powerful. Our profitable trading algorithm called Stophunter Pro. This trading robot took a small $1,000 account and grew it into over 500,000 in just 5 years. It's designed to catch the exact stop odds market makers use. Here's what you could have got on a $100 account. We are going to use the previous quarter, which is May 2025, right up to the time of recording this video, which is 18 August 2025. So I'm going to start off this test right in front of you so that you'd see we are risking 5% of the $100, and this is what we were going to get. $100 initial deposit, and then we were going to get 291 is our profit. Here is the profit by month ratio. If you need this particular trading robot and you're serious about leveling up your trading, fully automated and no stress, no emotions, use the link that I've left in the description box below to get your 249 lifetime copy. All right, so this is Euro CHF, which has two EMAs. The one in dark blue is the 800. The one in light blue is the 50 EMA. So on these two EMAs, we can see that the 800 measures the trend of the previous 800 days, and this one measures the trend of the previous 50 days, or basically candles. So in this particular case, we can see a crossover of the two EMAs that was issued. We've said when 50 goes above, it's actually an upward bias. So in this particular case, the next step is now for us to wait for a trap, and on that trap we are saying there should be candlestick bodies below the 50. We are not going to enter at a touch and reverse, but at a candlestick, the candlestick must go below the 800 and then they go right above the 800. When a candle closes above the 800, that is where we want to make an entry. Therefore, at this particular candle, that is where we're going to make an entry, and our stop loss below structure, and our target at 2R. So let's have one more example. We can see we had there was an upward move of these EMAs, signifying that there was a long-term trend to the upside, and when it reversed here where I put this arrow, we can see that the market crossed over and then it went back to the 50, and at the 50 what happened? It went right above the 50 and then it closed below the 50, clearly with this candle. We can see this candle closing below the 50, and our stop loss above structure, and our take profit at 2R, like that. Let's look for another crossover again of the 800 50 EMA. We can see here we had an 850, and here we can see a full body of the candlestick below the 50, and then this one was the candle that actually closed above the 50 like this, and the market went right straight into profit. So basically that is how you will be trading, and you actually see that you get more entries if you open several charts or several pairs to look at, whereby you are actually scanning for those entries that have given you a 50 800 EMA cross. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.